Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at the Sologenic Solo token. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Also, I want to mention the donation links down below in the description. If you want to support Ukraine and you want to help us win the war against the Russian tyranny, then feel free to go over to the description. There is a link to support the Ukrainian military and the Ukrainian refugees. So feel free to go over if you want to support us. It doesn't have to be, you don't have to donate, large amounts of money. Obviously, everyone has their limit, but even $5, $10, everything's going to add up. So if you feel like you want to support, then you have the chance to do that. So thank you very much. The links are official. They have nothing to do with me personally. You can double, triple check them. And yeah, with that out of the way, let's jump into the daily chart. So we have this Fibonacci retracement over here. So this over here is going to be our swing high. And this over here is our swing low. So this gives us the 1.618 target over here, over at, what's that going to be? 82 cents, almost 82 cents. And we have our golden ratio here, the 0.618, which is the most important Fibonacci retracement level out of all of them, sitting at 44, almost 45 cents roughly. And currently the 20 EMA over here had a bullish cross with the 55 EMA. So this was really good, despite the markets not being that bullish, actually being bearish, and Bitcoin pulling back every now and then. Sologenic had a nice little pump over here. So as you can see, we had this bullish cross April 7th. This was your confirmation of the uptrend. And since then, you did have a couple of moves to the upside, but the momentum has started dying out, which it is, it's quite obvious that you're not going to be going up forever, and you need to retrace back down to key levels of support in order to continue in a healthy uptrend. And the gap in between the 20 EMA and the 55 EMA was very, very big over here. As you can see, the 20 is the yellow, the 55 is the red line. Once the gap is that big, you can usually see it as a warning sign. Basically, that tells you that, hey, you're perhaps going to see a pullback and you're perhaps going to lose the 20 EMA, because the further you are from the 20 EMA, the harder it is for it to catch the price action as support. Now, the 55 EMA over here is sitting at 48 cents at the moment, and that is a support level that hopefully we can bounce off of from, right? So if we fail to hold that level as support at 48 cents, I would look at a level of support below us, which is the 0.618 golden ratio at 45 cents. So always have your buy limit orders above the support levels. So here, the exact support level, for example, is 0.44734. So just to round it up, I would just have 0.451 cents as my buy order, right? It's just slightly higher, but that gives you more chances of getting filled, because sometimes the price doesn't actually bounce off the support level because a lot of people have buy orders in that area, and the price is more likely to reverse. And if that happens, you're going to be forced to buy higher, but you want to get filled, right? And, a couple of cents up, even, half a cent up won't affect anything. So a bounce off the golden ratio would obviously be healthy as well, because this would confirm that this area over here is a support level we can be eyeballing for future. And for example, if we have a bounce from here and you continue on, you have another leg up and you start coming back down, there's another strong pullback on Bitcoin. You can always look for this level as support, right? Because you've bounced off from there previously, but that is yet to happen. We'll see what happens. Basically, what I'm waiting... Oh, I apologize. I just hit the microphone. So what I'm waiting for is for the 20 EMA to come closer with the 55 EMA, right? Because you don't want that gap to be very large as it is over here right now. So you want them to come together. The price action could potentially drop below the 55 EMA a bit, right? It may come in between the EMAs. That would be healthy as well. And then we can have the EMA squeeze where the 20 EMA slings the price action over its shoulder and, absolutely blasts into the uptrend. But we'll see if that happens. This is just one of the bullish scenarios that I'm looking at. Obviously, we had this we had this bullish pattern over here, which was a bull pennant. And we just broke down from that bull pennant. And let's see what is potentially going to be our target here if we are going to, if we just lost the support here, obviously. So let's see what the target is going to be. So if you place the pole over here, if you place the pole, the target is going to be way down here at 32 cents, right? So I don't think we're going to see that play out. I don't think. So what I can do is just, I can make the pole a bit smaller, right? And just use the previous candle over here and just take that and place it down over here. And that pretty much gives us the 0.5 Fibonacci level over here at 41.5 cents, okay? So this is something that we can target, obviously. We can always come back lower. Obviously, we can always come back lower. Depends on the Bitcoin pullback, depends on what news Sologenic has. If there are any bearish news, obviously the price is going to dump. But below the golden ratio, we have the 0.5 over here at 41 cents. So this is a zone that you can be targeting. In my opinion, if we start losing the 55 EMA, I would, immediately go for some buy limit orders above the 0.618 golden ratio. Okay, and the 1.618 over here, as we have discussed previously, is sitting at 82 cents. For that, we need to break the swing high of this Fib retracement over here. So once you break that, you can be targeting the 1.618 over here. So that's something to keep in mind. And let's go over to the daily chart, the daily RSI, I mean. And as you can see, we are in a downtrend over here. And let's just see if we have any divergences, right? Let's see if the price action has any divergences from the RSI. Not that I can see right now, but we're going to check the 4-hourly chart as well. So what I want to show you over here is this zone over here of the RSI. So this is when we got overbought on the daily chart, and this is where you could have taken some profits. Obviously, there was a little bearish divergence playing out here where the RSI printed a lower high, but the price action printed a higher high. This showed that the momentum was dying out, and eventually we had our pullback over here. So the RSI is a very good indicator for you to use if you want to know when to sell or when to buy based on the little chart that you have over here. So if you're below the index of 30, then you are oversold. If you're above the index of 70, then you are overbought. So based on those two extremes, you can assist your trading. But let's jump over to the 4-hourly chart. Switching over to the 4-hourly chart. So we just had a bearish cross on the 4-hourly chart over here, April 21st. And this basically was your confirmation of the downtrend. So if you took some profits when you saw this bearish cross, you, my friend, would have been able to get a discount of 12.5%. So we can buy in cheaper right now. And as you can see, we're losing the 786. We are very much overextended from the 4-hourly 20 EMA. There's a huge gap in between the 20 and the 55 EMA. If you take a look at the RSI right now, you're in the oversold on the 4-hourly chart. You are in this trading range over here. As you can see, you're trading in this range. You had a little fake out over here, and then you came back into the range. And right now, you're even losing the support of this range. So potentially right now, you're losing the support of this channel down pattern, and you are very much oversold. You're sitting at the index of 16.4 right now. So this is an extremely oversold asset at the moment. So if you wanted to dollar cost average in, this is your time to do so. And as you can see, we had a bounce over here from the 786 support Fibonacci level, but we just lost that support. So as you can see here, here we had a strong move to the upside without any retracements. So this is why if you're going to start falling right now, you can absolutely just blast and nosedive, and there's nothing to hold you below except for the fib levels. But if you would have had some retracements along the way and a healthy uptrend, you wouldn't have this strong pullback right now that we potentially can have. So this is unhealthy. Obviously, this growth over here is very unhealthy. And let's see what levels are going to hold us as support. You have your support levels over here. And the next swing high realistically that we have over here is all the way down here at 35.5 cents. This is where you can land and back test this area as support, bounce from there, and have your next move to the upside. But we'll see if that happens. We'll see what happens. Just be prepared for all outcomes. If I missed out anything on the charts, please let me know down below in the comment section. Feel free to follow me on Patreon. It's a great way to support me and a great way for you to get more exclusive content. If you want TA requests, video requests, buy alerts, sell alerts, low cap gem calls, project reviews, market sentiment analysis, and a whole bunch of stuff is on my Patreon. So feel free to check that out. It's linked down below in the description, and also feel free to check out the donation links to support Ukraine as well. That is it. I'm gonna catch you in the next one. Goodbye and good night.